And so I think that there's a digital transformation of the capital markets going on right now, and it's profound. And what it means is a company like Metaplanet can go from being worth 10 million to being potentially worth 10 billion in a couple of years. So show me a better idea. How do you go from 10 million to 10 billion in 24 months or 36 months? It's not very common. So I really think that's the part that's underappreciated. I mean, people in the business staring at it, like literally most of the crypto OGs that have been in the business for 15 years are staring right at the thing and ignoring it or rejecting it as it's happening. Right? That's the irony to me. So, and I think that's because, again, their metaphor is they're looking for some technical widget to create instead of reconceiving the way that wealth is stored. I can take a dying hotel or a dying restaurant chain and I can make it worth $1 billion just using Bitcoin as digital capital. And on the margin, it's more likely to work than not. And so I think that the really big compelling ideas are the monetary ideas. Now the question is, can you raise the money? Okay, well, it depends on who you are and whether or not we like your company and whether you're trustworthy. So this all becomes an exercise in capital raising. And the question is, will some companies be better at raising capital than others? Sure, they will. Are there some markets, if you're launching a company, a Bitcoin treasury company in Japan, your odds are higher than if you're launching that same company in Venezuela, right? I mean, where's the money, right? So it's just that there are certain options right now for people that are creative. If you're the first company in Japan to adopt a Bitcoin standard and you grow rapidly and you generate a lot of capital, then not only do you have the most compelling BTC-backed equity in the Japanese capital market, you can have the most compelling BTC credit instruments. Well, there's trillions of dollars in Japan. The Bitcoin treasury company movement is traditional companies trading in the public markets that have adopted the Bitcoin standard. It's not crypto companies. So it's impossible for them to actually generate or take on the leverage the crypto companies took over, okay? You can't get a loan to buy Bitcoin in the traditional finance market. And so all these Bitcoin treasury companies, they're not getting levered up. They're raising equity. They're not raising debt. The debt markets won't give them capital. So whereas if you look at what created the crypto winter, I was levered up 20-1 on FTT token, and then I pledged $1 billion of FTT for some Tether, and then I went and I bought some whatever Luna or something, and you ended up daisy chaining 10x leverage 3 times. You created 1,000x leverage on Yo-Yo token. You can't do that in traditional finance markets. Like if you can't borrow $1 billion to buy Bitcoin. No one will give you the money. If you had $1 billion of Bitcoin, you can't borrow $1 billion against it. Mm-hmm. You can't even lever it 2-1. Like my company's levered 1.1, like 1.2. Like, so you might get 10, 20% leverage, maybe 30% leverage. You can't get 10x leverage. And so all of these companies that are being launched are governed by much more conservative financial principles. You can't get a credit rating. We have stuff that's 10x. We have bonds that are 50x over collateralized, 50 times. We can't get a credit rating on them. Okay, so why would you sit around worrying that these guys are getting over levered? That's not the problem at all. All the Bitcoin treasury companies can't get over levered if they wanted to, because the conventional credit markets are so hyper conservative. They actually value Bitcoin up until right now is worth 0. You can't lever it at all. You know, who's behind the convertible bonds? That's equity. For example, when someone buys a $200 million convertible bond from you, they sell $150 million of your equity in order to hedge it. So what you've really got is probably not even 5% leverage in the entire system. Like if you had $100 billion of Bitcoin, you might have $5 billion of something that looks like leverage. That's about all you have. So there's really not that much there because there's no way to get it, right? The only way to sell a convertible bond is have so much liquidity in your equity that the convertible arbitrageurs can short the stock. You have to actually go and find equity investors. You have to find someone that will inject a slug of 100 million, 50 million, 200 million, 500 million of equity. And they might do it in the form of US dollars, or they might do it in the form of euros, or they might give you Bitcoin. But at the end of the day, they're equity investors. And so this entire movement is really the creation of BTC-backed equity. So at the end of the day, the money is sitting in these funds that have mandates to invest in equity. They can invest in Smarter Web, or they can invest in MetaPlanet, or they can invest in Strategy. They just can't invest in Bitcoin. They can't, they won't, they just can't. So these companies are essential in order to bridge the traditional finance economy with the crypto economy. And if you don't have the companies in the middle, there's no way for the capital to flow. But with the company, like Smarter Web or like MetaPlanet, then the capital that is locked up in a retirement account in Tokyo or London can flow into a Bitcoin treasury company that can then take it and buy Bitcoin with it. And we could go into lots of details about why is it like that, and is it fair, and is it rational? It's above our pay grade. The world is structured the way it's structured, and that's where the capital is. And the way you got to look at it is, in a couple of seconds, the money can move from there into the equity, or we can wait 30 years and see if the world changes, and then maybe it will and maybe it won't. But it's like 30 seconds or 30 years. So the Bitcoin treasury companies are meeting a need, right? They're bridging the gap, and they're solving this problem. And that's worth something. And so that's why they merit a premium, because they're more tax efficient, they're more capital efficient. Or simple example, I give you a suburb, and on the left side of the street are houses that you can buy and put a mortgage on with no money down. And the right side of the street, you have to pay for the house in cash. Do you think the house on the left side of the street that you can get no money down will trade at a premium to the house on the right side of the street that you got to pay for with cash? Right? The answer is obvious, right? The house on the left side of the street will be double or triple or quadruple, because the world's full of people that want a house, and the world's full of people that don't have the money to pay for the house. So the Bitcoin treasury companies are giving you the ability to get Bitcoin exposure with someone else's capital, or with capital that's stranded. And that's why they're growing rapidly. And that's why we need more of them.